So, here's a thought. What if the cheapest way to make electricity isn't some far-off dream? What if it's already here, getting cheaper fast, and maybe we're not quite grasping how big a deal it is?
It sounds almost too good to be true, doesn't it? But the data seems to bear it out.
Exactly, and that's what we're digging into today. We're doing a deep dive based on this really fascinating and very timely study. Impact of weighted average cost of capital, capital expenditure, and other parameters on future utility scale PV levelized cost of electricity.
That's the one. It's quite a title, but the findings are crucial.
Right. So our mission today is to unpack what's really driving the cost of big utility scale solar PV. We want to uncover some frankly surprising insights about its future competitiveness, what makes it so affordable, and where does the study suggest we're headed?
Okay, so maybe first things first, we should probably define LCOE, levelized cost of electricity. It's basically the key number we use to compare the total lifetime cost of different power plants per unit of energy they produce.
Got it. So it lets you compare apples to apples cost-wise.
Exactly. And in this study, that LCOE calculation covers, well, pretty much everything from manufacturing the panels, the installation, running the plant, that's operations and maintenance, even replacing things like inverters down the line, and crucially, financing costs.
Okay, financing. We'll come back to that. What doesn't it include, though?
Right, good point. It doesn't usually include things like the costs of integrating the solar power into the wider grid, although the study does note those are often pretty small for PV. And it also doesn't quantify the broader benefits like, cleaner air or hitting climate targets. So it's a very direct economic comparison of just the generation cost itself.
Okay, makes sense. So let's get to the big headline from this study then, because honestly, it's pretty eye-opening. Utility scale solar isn't just going to be cheap.
No, it often is already.
It's already the cheapest game in town in a lot of places. This isn't future stuff, it's happening right now. And the study gives some real numbers from back in 2019 that, well, they really make you pause.
Yeah, the European examples are striking.
Right. So utility scale PV LCOE in Europe, and this is assuming a 7% nominal weighted average cost of capital, or WACC.
And we will explain why WACC is so important later.
Definitely. So with that 7% WACC, the costs range from just 24 euros per megawatt hour down in Malaga, Spain, which is sunny, makes sense, up to 42 euros per megawatt hour in Helsinki, Finland. Less sunny.
Still pretty low, though.
That's the thing, because here's the kicker. Back in 2018, the average price on the day-ahead electricity market was 47 euros in Finland, and actually 57 euros in Spain.
So even in less sunny Finland, PV was already cheaper than the average market price back then.
Exactly. Cheaper than the average spot price across Europe years ago. That's pretty significant.
It really is. And what's maybe even more fascinating is how fast these costs are projected to keep falling.
Okay, tell us about the future projections from this study.
So the study forecasts that by 2030, that LCOE range, Malaga to Helsinki, it'll tighten quite a bit, down to maybe 14 euros per megawatt hour in Malaga and 24 in Helsinki.
Wow, okay, halving almost in some cases.
Pretty much. And then you look out to 2050, the range gets incredibly tight. We're talking 9 to 15 euros per megawatt hour.
9 euros.
9 euros. At which point, the study basically says PV will be, and I quote, clearly the cheapest form of electricity generation everywhere.
Everywhere. That's a bold claim, but the numbers seem to back it up.
And this isn't some sudden thing, right? This trend, we've seen module prices themselves drop, over 90% in real terms in the last decade?
That's incredible.
And the total system price, so the whole power plant, that's down almost 80%. It's just relentless cost reduction.
It really feels like solar just keeps winning this price war, doesn't it? So, okay, when you hear those numbers, the obvious question is, why? What are the real levers? What's actually driving these costs down so dramatically?
Well, this study digs into exactly that. It looks at the key variables feeding into that LCOE calculation.
Right, the ingredients in the recipe.
Exactly. So you've got that WACC thing we mentioned, the cost of capital. Then the obvious ones. Capital expenditure, CapEx, that's building the plant. Operational expenditure, OpEx, running it. And then things like how much electricity the panels actually generate, the yield, how much their performance degrades over time, and how long the whole system lasts.
Okay, so lots of factors. But which ones matter most?
Right. And here's where this study throws a bit of a curveball, perhaps. It found that, okay, apart from the obvious thing, how sunny a place is, the location.
Sure, Malaga versus Helsinki.
Exactly. After location, WACC, that weighted average cost of capital, is the single most important input parameter.
Really? More important than the cost of the panels themselves.
In terms of its impact on the final LCOE, yes. The study puts it starkly. Just increasing the nominal WACC from 2% up to 10%, that doubles the LCOE.
What was it? Wow. Okay, so explain WACC a bit more simply. What exactly is it?
So WACC is basically the average rate of return a company or a project expects to pay to all its investors, both the people lending money, like banks, and the people putting in equity, like shareholders, to finance its assets. It's the blended cost of money for that specific project or company.
Right, the cost of borrowing and the return investors expect.
Precisely. And the reason it's so impactful for solar PV is fundamental to how solar works. Unlike, say, a gas plant, solar has zero fuel cost, right? The sun is free.
Free fuel.
And its running costs, the OpEx, are relatively small once it's built. So most of the cost is packed into that initial upfront investment, the CapEx.
Okay.
Which means the cost of financing that big upfront CapEx becomes disproportionately important compared to technologies where fuel or ongoing costs are a larger slice of the pie.
Okay, that makes sense. The upfront cost is dominant, so the cost of financing that upfront cost really moves the needle.
Exactly. And the study looked at a range of WACC rates, 2%, 4%, 7%, 10% nominal, to reflect different situations like different types of investors or different perceived risks in different markets. They kept inflation steady at 2% to get the real values.
Okay, so WACC is king after location. That really does put a lot of emphasis on the financial side, doesn't it? But, we always hear about the falling cost of the actual hardware.
Right, the panels, the installation.
Yeah, CapEx and OpEx. Are they still major drivers, or is this study saying, look over here at the finance costs, let's start with CapEx building the plant?
Well, CapEx is definitely still falling. No question. The study breaks it down, modules, inverters, the rest of the kit to balance the system. And it acknowledges those huge historical price drops for modules. It mentions, for instance, a 40% learning rate between 2010 and 2019.
Meaning
for every doubling of the total amount of solar ever produced globally, the price dropped by 40%. That's incredibly fast learning.
Yeah, that's steep. And looking forward.
The study still projects significant CapEx reduction, about 65% lower by 2050 compared to the baseline in their main scenario. So costs are still coming down there.
Okay, 65% is still a big drop. What about OpEx, the running costs?
Also falling significantly. Operations and maintenance, O&M, that's the bit of it. There were massive drops historically, like over 70% reduction in O&M contract prices in Europe in just a few years leading up to the study. And the study projects another 50% reduction in OpEx by 2050 in its base case. So yes, both CapEx and OpEx are still getting cheaper.
Okay, impressive declines, but I sense a but coming.
Well, the but comes when you look at the sensitivity of the final LCOE to these factors compared to WACC.
Right. So how much does a change in CapEx actually change the final price of electricity?
Exactly. But before we get to that sensitivity, there's another really important point this study makes about the data itself.
Okay.
It asks, how does the realistic market-based data used in this study compare to what major institutions, the big players setting policy, are using in their models?
I'm guessing not favorably.
Not at all. It's actually quite shocking. The study finds that many major institutions, including those whose energy models feed into things like the big IPCC climate report.
The Intergovernmental Panel on Climate Change.
Yeah.
Important stuff.
Hugely important. Their models are lagging way behind what's actually happening in the market. For example, IPCC reports were projecting PV CapEx for 2020 to be around $1.79 per watt peak. But the actual utility-scale CapEx in 2019 was already down around, say, 45 to 65 cents per watt peak.
Wait, less than half? Like a third? Almost?
Yeah, a massive difference. And the consequence is huge. It means major international climate policy decisions are often being based on cost data for PV that is, frankly, vastly outdated and just wrong.
So they're underestimating solar's potential.
Massively underestimating it. This study suggests PV's share could realistically be 30–50% in competitive energy markets, maybe even hitting nearly 70% globally for the power sector if we use accurate cost data. But the outdated models don't see that potential.
That's a critical finding, basing global policy on bad numbers. Okay, so now let's get back to that sensitivity analysis. You said it turns some assumptions on their head. This is where it gets really interesting.
It really does. So first, it confirms again. Location, the amount of sunshine you get, that's the biggest factor. LCOE in sunny Malaga is 24% lower than the baseline in Toulouse, France. LCOE in Helsinki is 33% higher. No surprise there.
Right, geography matters.
But then number two, it's WACC. Changing the nominal WACC between, say, 4% and 10% causes over a plus or minus 20% swing in the final LCOE. That's the second biggest lever.
Okay, WACC is still right up there.
And here's the kicker. Changes in the things we often focus on, like CapEx, OpEx, even those learning rates or how fast the market grows, they have a relatively smaller impact on the future LCOE.
Smaller? How much smaller?
Well, for example, if you change the CapEx projection up or down by 20%, the final LCOE only changes by about plus or minus 14%.
Huh. Less than one-to-one impact.
Right. And varying the learning rate assumptions only changes LCOE by about plus or minus 11%. Even wildly different assumptions about how much solar gets built globally by 2050, say 9 terawatts versus a massive 62 terawatts.
It's a huge difference in market size.
Enormous. But it only causes about a plus or minus 15% change in the projected LCOE.
Okay, let me try and wrap my head around this. You're saying that tweaking the financial costs, the WACC, has a bigger impact on the final price of solar electricity than even quite large changes in the physical costs of the equipment or massive differences in how big the market gets.
That's exactly what the sensitivity analysis in this study suggests. It implies that convincing the financial world that utility-scale PV is a really safe, stable, boringly profitable investment.
Boring is good for finance.
Boring is great. So lowering the perceived risk, which lowers the WACC, that might actually be more crucial for driving down the cost of solar power further than, say, shaving another 10% off module prices.
That is a massive insight. It really shifts the focus for policymakers and investors, doesn't it? Away from just technology costs towards financial perception and risk assessment.
It absolutely does. It reframes where the most powerful levers might be hiding.
Okay. And of course, as solar becomes dominant, we need to talk about storing that energy for when the sun isn't shining. Batteries.
Right. Storage is key to enabling really high shares of solar. This study focuses on batteries, specifically lithium-ion, as the leading partner for large-scale PV plants.
And the good news there is that battery costs are also falling fast, yeah.
Yep, following a similar, though maybe slightly less steep, downward curve. The study provides some compelling cost projections for batteries, too.
Driven by EVs partly, I assume?
Absolutely. The sheer volume growth from electric vehicles is a massive driver for battery cost reduction, which solar storage then benefits from.
So what does the study say about the combined cost? PV plus storage.
It presents LCOE figures for PV plus storage systems. Back in 2019, if you added 1 kilowatt hour of storage for every kilowatt peak of PV capacity.
Okay, a specific ratio.
Yes. The combined LCOE ranged from about 39 euros per megawatt hour in Malaga up to 69 euros in Helsinki.
Still competitive in Malaga, getting up there in Helsinki back then.
But look how fast it catches up. The study projected that PV with that amount of storage would be competitive in places like London and Toulouse by 2020.
Wow, almost immediately.
And even in Helsinki and Munich by 2025. So that combination of PV plus batteries is rapidly becoming cost-effective almost everywhere. They really are seen as the cornerstones of the future grid, allowing very high PV penetration while keeping the lights on.
Okay, so let's pull all this together. What does the study really mean for you, our listeners, whether you're involved in policy or investing or just trying to understand where energy is heading?
Well, for policymakers, I think the message is stark. This study provides crucial, up-to-date data. You need this to make informed decisions. It shows PV isn't just a future hope, it's often the cheapest now.
And it underlines the low risk profile too, right? Economically, technically, environmentally.
Exactly. It basically screams, we need to move faster,
Yeah.
and the economics are on our side if we use the right numbers. And importantly, stop using outdated cost data that hampers ambition.
Right, and for investors.
The message is twofold. One, utility-scale PV is a safe, profitable, long-term investment. Two, your perception of that safety and profitability, which gets reflected in the WACC you demand.
Yeah.
That has a huge disproportionate impact on the final energy cost.
So the financial community holds a really powerful key here.
They really do. It's not just about picking winning projects. It's about collectively recognizing the low risk and adjusting financing costs accordingly. Shifting that narrative is vital.
And for all of us just thinking about the energy future.
I think the big takeaway is that the solar industry is moving incredibly fast. So fast that its cost levels are often severely underestimated, even in really important global reports that shape climate action.
Which leads back to that outdated data problem.
Precisely. It highlights this urgent need to keep our data current, to really grasp the opportunity solar presents to tackle the climate crisis quickly and potentially cost-neutrally.
So, summing up, PV is already incredibly cheap. It's getting much cheaper still. But maybe the surprising king of cost drivers, after the sun itself, is the cost of money, WACC. Even more so, perhaps, than just making the hardware cheaper. And critically, the assumptions baked into policy often lag way behind reality.
That captures it well. And perhaps to leave you with a final thought, a question to mull over.
Please.
Given this finding that financial parameters like WACC seem to have a larger impact on PV's future costs than even big shifts in hardware costs or market growth, where should we be focusing our efforts most to accelerate the energy transition? Is it still mainly about pushing for the next technological breakthrough? Or is it now fundamentally about changing how the financial world sees, values, and invests in renewable energy?
That's a powerful question indeed. A lot to think about there regarding technology versus finance. This deep dive was guided by the research presented in Impact of Weighted Average Cost of Capital, Capital Expenditure, and Other Parameters on Future Utility-Scale PV Levelized Cost of Electricity. Definitely worth digging into if you want the full details.
Right.
We encourage you, as always, keep digging, keep asking questions, and stay curious. Until next time.